Afternoon, everybody. Welcome to the lending report for March 7th, 2025. Let's get right into it. Mortgage activity this past week, pretty active. Purchases up 9% and refinances up 37% week over week. That's huge. A lot of activity there. People looking probably to pull out some equity from their homes, given they have as much as they need to help relieve some financial struggles probably right now. Jobless claims, those filing for the first time down 21,000, but continuing up 42,000. Now, this week was all about jobs week, but we're going to start um, with ADP. With GDP. So this is a revision from the Atlanta Fed. They initially indicated that they expected the GDP to improve to about 2.4%, but now their forecast is a negative 2.8%. So that created a little bit of activity in the MBS markets for us this week, but that's a pretty substantial revision. It's basically 4% lower, going from a positive to a negative in terms of growth in the economy. Now, this week is Jobs Week, big week. ADP coming out first for the month of February. This was a big miss. The expectation was that there would be 140,000 jobs created. Actually came in at 77,000 per this report. And then the 2024 was revised down as well, as you can see from these numbers. The bigger hits coming from larger companies and mid-sized companies, those showing where most of the growth was, and then the small companies taking the hit. Actually, sorry for misspeaking there originally, but yeah, large and medium companies are the only ones really producing any jobs at this time. Small companies falling to the wayside. And you can see here by sector, leisure and hospitality continuing to lead the way, which has been no surprise. This has been the case well over the past 2 years. And then if you look at wages, those staying with their jobs remained unchanged, and then switchers down just a tick, 0.1%. Now we got BLS today for the month of February, and BLS again, a little stirring about this particular report, showing the jobs came in at 151,000, so more than the ADP report, which is not unusual. But the birth death model showing 136,000 creations, where ADP was lower by 12,000. Now, what's important within this report, and what I like to point out, are the hours worked and wage earnings, because we are showing right now that average hourly earnings is at $35.93 an hour, which is good, showing up 0.3% month over month. But what's important to note from here are the hours worked. We're still at a 15-year low at only 34.1 hours worked per week. If you look at the average weekly earnings, right now, the average person at this wage in these hours is making $1,225, which month over month is good at 0.3% up, but it's actually down year over year. So people making less than they were a year ago, but probably have more financial debt at this juncture, based on what we're seeing in terms of credit card debt accumulation and delinquencies in payments with credit cards and auto loans and student loans, since those are not being reported. Then also within the BLS report, we get the household survey, and the household survey was, again, totally different from the other survey within the BLS report. Is jobs showing a loss of 588,000, predominantly coming from lower wage earners. Just so you know, younger people making up what's being created within the job force, those people under 20 years of age. But the unemployment is what we want to look at here. Right now, the unemployment number, the one that we all focus on, the U3 number, did show that unemployment went from 4% to 4.1%. Not a huge change, but not surprising that it went up a little bit, given the amount of restructuring that has been done in the government as of late and the number of people losing their jobs. What I think is more important is if you look at the U6 number, and this is the all-in number. This doesn't take away anything. This includes everybody that's unemployed at this point. The unemployment did rise from 7.5% to 8%. So I expect we will continue to see this trajectory trajectory upwards in the unemployment with the number of layoffs that we continue to expect to see with this administration and their cuts to federal jobs and so forth. So we will watch that closely over the next couple of months and see what happens. Now let's go directly into the MBS charts. Not wanting to take me there. There we go. All right. Sorry about that. Changed up the system, how it operates. Had to clear out those slides. But this is the MBS market preview for you. You can see that we've had a little bit of up and down this week. Started out a little bit strong, lost a little bit of ground, made it back up. So I would say overall we're just flat for the week. But we did make up a lot of ground the past week. So this is good. Still not where we were. We're about even with where we were about a year ago right now, not improving necessarily. So you're still in a really good position to buy if you are interested, just because we are continuing to see that home appreciation and home values where you can really build generational wealth with home ownership. So still a good time to buy. If you're interested, reach out to me. Be happy to see what your qualification might be, what we can get you into. Remember, it doesn't take 20% to get into a home. You can get in as little as 3%. In some cases with DPA, maybe a few $1,000s depending on your situation. So give me a call if you're interested. I hope you have a great weekend. I will see you next week.